Guest in the studio, Mr. Ashi, Anand, CEO and founder at IME Capital, joins us now. Mr. Anand, thanks very much for being here. You're quite bullish on the whole digital space and, in particular, fintech as well. You hold significant, stakes in the likes of Paytm, for instance. Tell us your thesis on those kind of companies. I mean, the only recent positive, so to speak, we've seen on Paytm, a stock like that, has been the payment aggregator license that's come in. But what is the upside from here on, given how the regulatory overhang has been a big concern on that stock?
Sure. So actually, if I can just start off first by just talking about the overall thesis, because Paytm really fits within that.
Yeah.
I think what we are seeing very, very clearly is a very sharp value migration that is taking place from traditional businesses towards kind of new age digital first platforms. And you're seeing this across industry segments. This is a structural kind of theme that we believe is only going to accelerate as we go forward, as kind of the newer generations come in more into the consumer class. That is where that trend, we believe, will only just accelerate. So you have very, very robust kind of trends in terms of growth towards these new age digital companies. A very important element about digital platforms is that these businesses also tend to move or gravitate towards monopoly, duopoly, or very tight oligopoly kind of structures. So very large markets end up being consolidated within a few companies. Now, that is something similar that we're kind of seeing in the kind of payment space or in the kind of overall fintech space. Now, if you're looking at a company like Paytm, while there is clearly a traditional payments business, right, and that's the core of the current business.
Yeah.
What is really very interesting is the longer-term monetization capabilities of as Paytm kind of really starts flexing its muscles around lending, around capital markets, the kind of distribution that Paytm has. And these are a very large part of its consumers are consumers that the traditional finance companies could not really reach. You've seen a recent IPO grow, right? And the kind of growth they've had of extremely kind of in a very short period of time. So I think what is interesting to us about Paytm is not what's currently there, but as you go 3-5 years down the line,
the potential.
The potential and the kind of incremental flow through of revenues to profits in financial services. It's a pure distribution business. That is really very interesting, and we see a lot of value being created.
We understand, and it's a big prospect from a long-term standpoint, etc. But just to play devil's advocate here, because what we've seen, barring the food tech companies, which have now migrated fairly well to the quick commerce companies, a lot of these digital natives, a lot of these companies invariably fail at the next leg of evolution. So a lot of the brokers, the discount brokers, etc., will not extrapolate that gain into financial services as much, or a lot of the, say for instance, back in the day we had Naukri, InfoEdge, it still forms a large part of their overall business. They've not captured that sort of moat into other things. So is that a risk? Say for instance, a lot of people using Paytm right now, but maybe as they come up with ancillary services or some other app gets the benefit of that a lot better than what these guys could.
So actually, that's the interesting point, right? And I think that is really one of the core of when we are evaluating digital platforms, understanding how easy is it to kind of be able to launch or kind of come up with supplementary services that kind of add incremental value.
Yeah.
Now, if you look at Paytm as an example, before this kind of recent weakness in kind of unsecured lending, they launched kind of lending on the platform and just BNPL and personal loans.
Yeah.
In a year and a half of their launch, they had crossed a dispersal run rate of SBI cards, the second largest issuer of cards in the country. Right? So in terms of do users on the platform are they willing to use on other services? I think that is quite clearly demonstrated in the case of Paytm. Right? Now, you've had the kind of regulatory issues. You've also had weakness in unsecured lending, so that part had gone a bit slow. But you clearly do see that kind of potential, right, in terms of just the kind of scale that can come in quite rapidly. So when we do look at kind of digital platforms, right, the whole core is in terms of the monetization. How clear is that? So say, for example, when we had launched our digital disruption strategy in Feb 23, at a time when these stocks had been hammered, they were down 50-70% post the IPO. And I think our core call was that if you do study their cost structures and you understand the kind of monetization levers, these companies can be incredibly profitable over the longer term. But you really have to, there are few assumptions that have to be tested. So say, for example, back then, Zomato and Swiggy did not have platform fees. There were hardly any delivery fees before that. Delivery fees were just introduced post-COVID. But as they kind of add in on monetization kind of levers, Consumers, I think the core call on digital platforms is that once a platform has achieved a certain level of dominance and strength,
Then
it becomes very difficult to replace them.
Yeah.
And then suddenly users, they don't have an option. You are
Stickiness.
not going to not order pizza because there's a 5 rupee platform.
So just before we let you go, and you spoke about the platform fees, etc., where do you stand on Meesho? Because they've gone on record saying that they will never have commissions,
Platform
they will never
fees.
have platform fees.
Yeah.
So Meesho has no commissions, has no platform fees. They have a 30% take rate. It's amongst the highest in the industry.
Yeah.
Right? So you don't need to make money. There are multiple different forms of monetization.
Yeah.
Meesho, I think, monetizes advertising income is a very big part.
Right.
And the whole logistics orchestration that they do, which is amazing, right?
So you like it?
It's an IPO, right? So we do have to be a bit particular, but I think as a business, it is really quite remarkable in a period of 5 years to kind of come in and compete against giants like an Amazon and a Flipkart.
Yeah.
And does that have a threat to delivery as well? Because I was just reading a note yesterday that said that their insourcing model is going to be a threat to delivery's core business. So does that become a threat? Because delivery as a stock in general has not done well anyway.
So in fact, one of the big reasons has been Meesho's insourcing that they've already been doing.
Yeah.
And I think the interesting part about how Meesho has done it, they've been able to do this without actually building out the logistics infra itself, just creating a kind of tech layer to build out the logistics. So yes, I think a part of delivery's underperformance could kind of be linked to that. But I think delivery still, in terms of a logistics company, is one of the most attractive logistics companies from a longer term perspective. So that is a company that we still do like, but Meesho is clearly a headwind.
Right, Ashi, thank you so much for sparing time and joining us today with your views on these interesting insights on this conversation.
Are you where would you put Lenskart? As a tech company or a retail company?
So we're having huge debates on that internally.
Got it.
According to us, so if you're looking at a company like a Lenskart, you're looking at a company like a Mamaearth, there are quite a few of these companies that kind of are kind of digital first, but the whole omni-channel and the physical infra is quite
Digital
important.
is what the street is calling
Yes,
them.
so I think we prefer pure digital companies. It's much easier to kind of scale very rapidly in those models. Though these are, I think, amongst the next best bet.
Right.
I think a lot of traditional businesses which aren't incorporating digital in a big way are going to kind of suffer from.
They're your one-down batters. Thank you so much, Ashi.
Thank you so much for
joining
having
in.
me.
With that, we'll take a short break, come back, get you more on the markets and a lot of individual stock-specific action. Stay with us.